Hey, good morning, Forex traders. This is Vance Williams out of the Seattle, Washington area here in the United States. Welcome to my morning Forex trading show. It's Tuesday, December 30th. In advance, Happy New Year to all of you around the world. I wish you all a happy and prosperous new year in 2015. This is my last show of the year. I'll return to my regular schedule next Monday. Okay, so let's go ahead and get started. As usual, first I just want to show when you press play on the player, make sure you click down here, be part of the conversation, and then you can follow me on Twitter or download my books, and you can see trading options here, free books at forextraders.com. So just when you're here, just click this link right here. That ought to cover that. All right, let's say, oh yeah, I gotta warn you. I want to stress that what we do on this show is for your educational purposes only. I'm serious about that. No wink, wink. I mean, you have to be able to read probabilities. You have to be able to assess your risk, manage your risk, and execute. None of which you'll ever learn to do in your first 3 or 4 months of trading. So, and that's if if you have really good education in trading. This is a real skill, so don't be silly. Fundamentals today, I was checking in with Dean Popplewell over at Market Pulse. He does a great job gathering current fundamentals and drawing conclusions. He wrote a lot yesterday about the elections and the Eurozone and the potential effects of the economies that are higher risk, like Greece and Italy. At the end of the day, it appeared that not much of it really mattered. And what I took away from everything I saw yesterday was really that deflationary concerns are still very much real in the Eurozone. And this keeps any thought of interest rates kind of at bay, interest rate hikes at bay for the foreseeable future, completely off the table. So my thoughts are simple. There's nothing positive out of the Eurozone on the interest rate differentials. Nothing come out of the central bankers there. There could be continuing repositioning of money while everyone else is out for the holidays. Keep in mind that we're coming into the end of 2014. New Year's Eve is tomorrow, followed by New Year's Day. I really don't expect a full day of real business by the usual market players until Monday. Today will probably be the last actual full day of business. But I wouldn't even count on it being a full day. And plus, a lot of traders and investors aren't even here. As far as high impact data, we do have consumer confidence out of the United States coming out at 10 a.m. That's really not expected to be a market mover, though, it could increase some speculation around that time. Talking about major banks, this is banks like Citi and JP Morgan, Danske, and many others, Credit Suisse. I don't name them in the trades just because this is a public thing, and I'm not sure what the regulations are on that. So I just kind of keep it generic when I talk about the trades. But I mentioned yesterday that only one aggressive major bank was trading. And in the last 24 hours, I checked on their trades, and they stopped out of 4 trades. So, but they're still the only major bank trading today. So, it is meaningful for me to look and see that those guys just are not around. And the main reason for that, in case you haven't connected the dots yet, is all of our decisions that we make when anticipating the future are based upon past behavior. And in order to make good decisions about past behavior, we want to make sure that we understand that we're talking about past human behavior, and we want to understand that today a lot of those humans are not around, right? So we're likely to get different behavior. And I have been noticing a little bit different pattern going on. I'm going to show you about that in just a moment, that may be being executed by the central bankers. So yeah, let's go ahead and get to that. I was noticing, and if we go back here, this is the 19th. I was noticing this pattern of drops going all the way back to the 19th, which is around the time that a lot of the traders would have begun to unplug in a big way. And so let's see, do I have the ruler on? To the ruler on. Watch this drop here. This drop is about 82 pips. Now you'll see it pulls back, consolidates, and watch this drop of 80 pips. And then it consolidates at this this bottom here just above 121.50. When it goes through here, it drops 89 pips. Now we've seen a bit of a correction and kind of a holding at this supply zone right here. Let me go ahead and stretch this over. You can see there's a supply zone where the sellers will be kind of camped out in this area. Had a lot of buying coming up through here, and then prices just kind of holding right below that level. Now, if this pattern repeats, we'll either see it fade across here, test the bottom, come up, go sideways, or we'll see it move from here down about 80, okay? Or maybe from here down 80. Or what'll happen is if it bounces here and goes sideways and then makes another move up or drops from there, wherever the momentum begins, you'll see about 70 or 80 from there. But keep in mind that we have that that major psychological level of 1,2,000 right down in here. So there's going to be I think a lot of speculators right in this area looking to buy off this level, thinking probably this is where the central banks are going to say, okay, let's take a break from this. What for them is inflation in a weakening currency. So they did take a break. Let's just go. Let me just kind of show you what I'm talking about there. We zoom all the way out. There's a big drop here. This followed by a bit of a break. Okay, and then there was a huge drop here, followed by a bit of a break. And just so you know, this right here, it looks kind of small, but that's like 391 pips, right? So, then it kind of stalls here, and then they start to make another leg down. Then they take a break again, which is also about 237 pips up. And you see it makes another leg down, and then this is another 260 pips up. So I just wanted to point out that during these drops, there's often a break taken where there's a move back of more than 200 pips. So going back to our 30-minute chart, the question for me is, are they going to take this break with this major pullback here, or are they going to do it a little bit closer to 1.2 thousand? This is the last day of the new year. It kind of makes sense that could begin today. But on the other hand, they've been able to reposition this money, while a lot of the traders and investors are on holiday, and they might continue to do that. It's really hard to say, but that 1,2,000 level, they usually don't take a break right at that level. It's usually before. So it's just kind of really unknown. We'll just have to watch and see what unfolds. With respect to, current intraday price movement, this buying in this area definitely captures my attention. There's a lot of buying, and this is about a move up. How big is that? That's about 60 pips. So there are buyers situated in this area right here. And then, of course, you have the supply area, this key level that it went through, 121.67 right here, which is currently holding. But what it looks like this morning is it looks like that the strength of the market is wanting to move to the upside. And barring anything unforeseen, this is, what we're likely to see. But if we look at this pattern that's been unfolding for a while here, it either pulls back and goes sideways, or it, makes another drop. And so, you can kind of keep your eye on that too. But it's looking to me like, obviously here, the day before New Year's, the risk is increased just because all of the regular players are out of the market. They're gone. For that reason, I'm not really trading at all. And I'm forced to speculate on what the central banks are doing with the money this morning. But it looks like they've made a bit of a move off this bottom here. And that might continue, might go sideways. I think it's a little less likely that we'll see another drop here today. Moving over to the pound, we met somewhere around here yesterday. His price was kind of bumping up around this 155.39 level. Then about 45 minutes later, when I got in the live trading room, as price was moving down through here, I basically pointed out there were going to be buy orders all in through this area, and that's in fact what kept price from sliding lower for the pound. Now at this point, we're about to the point where the money that moves intraday is about to flip to the top side, and probably we could ignore those moving averages and say it's right there right now. And so there's potentially a trade setting up here with a correction of this going up. So let's take a closer look at that. I'm going to just tell you that that's 55.39, and I can put a rectangle on that for you. Just kind of show you what that looks like. Let me grab that. Oops, got an extra one in there. I don't want. I'm going to say it's right there, and that's 55.43. So we're potentially looking at a trade. If price stretches up above here, you've potentially got a trade setting up in this area. And then keep in mind that there's going to be some sellers right in this area. They just tend to do that, camp out right in this area. So right here. So if you do get in this trade, you want to look to get out of it before it hits there. Or if it gets up close to there, look for some good pushback before you get a shorter second push in this area. Did want to take a quick look at the yen this morning because I noticed something. This is going back to the 16th when the yen had a major run and came back and closed at the 38.2 level on the daily chart. And then it started to make a good move. Credit Suisse caught this one. Very nice move for them. Over 400 pips, if I recall. They were one of the few who caught that level right as it came in there and caught that turnaround. I just named a bank, didn't I? Oh, well. Let's go to the 30-minute. And I will show you that in the last 12 hours or so, the yen has corrected about 150 pips. And it's still looking a little bit bearish here. So now if I were to take this information, what I'm seeing on the pound, and then combine that all, it kind of contributes to a correcting US dollar. So we go back to the euro now. It seems more likely that this is going to correct up and take that little break that we've been talking about. Why? That's what it's doing on the dollar yen. Pound stall, couldn't hit that bottom again, looking bullish this morning. Euro, not quite as decisive, but looking a little bit bullish. So that's what it's looking like this morning. It's looking like the dollar is going to correct up here this morning. So that's kind of what I see here coming in at the end of the year. I do see an incredible year lining up here with increased volatility, more frequency of trades, longer term trades, like medium term trades where we could hold positions, hold smaller positions for more gains, take medium term positions for progressions in the direction of the longer term sentiment. It could be a really phenomenal year. In fact, I'm going to say, based on what I'm seeing right now, 2015 will probably be the best year to trade currency that I've seen in over 7 years. So, and that's mainly just because we have diverging markets, competition, the perception that we're going to have some interest rate differentials between the countries. So that's about it. So again, Happy New Year to everyone. Be safe out there. To our members, I'll see you guys for our last session of 2014 coming up here in about an hour. And do write to me if you have any questions. Those of you who write to me found out I do write back and answer. So write to me with any questions. If you want to know about, how the training program works and how I coach, write me about that. If you just have a general Forex question, you can ask that as well. So you guys have a great new year, and thank you for your ongoing support and enthusiasm for Forex trading. Bye, everyone.